Of course, this is all happening overseas. Can we shrug off this worldwide weakness? I wouldn't bet on it if I were the Fed. A year ago, we had synchronized global growth. Now we have a global slowdown where the United States seems to be the rare exception. The Fed should make sure it stays that way. Sure, we have the lowest jobless rate since 1969, but you know what? I'm old enough to remember that we had a recession in 1969. The problem with the labor market is that it will look good right up until the moment it gets very, very bad. What about watch, though? I mean, doesn't watch represent the country's spend? Well, while these big retailers are doing great, they're crushing their less agile competitors. They can't afford the technology. They can't eat the tariffs like these guys did. Could be a lot of layoffs coming from the ailing department stores and from smaller, less capitalized businesses that can't handle the tariffs on Chinese goods. And you know what they do? They have to close their doors. Then there's Boeing, a company that's large enough to affect our gross domestic product. Some people say as much as 0.5%. All by itself. If the 737 MAX assembly line gets shut down because of these accidents, that could shave 0.5 percentage point of our GDP, according to the work I've done. Housing should get stronger now that mortgage rates have plummeted back to earth. But when I listened to that Toll Brothers luxury home builder call the other day, I wasn't exactly reassured, frankly. Maybe people are going to Home Depot to renovate their existing homes, not to fix up new ones. The latest housing starts numbers, frankly, anemic. Then there are all those aggregate indicators that I follow because I'm a geek. Lumber down 50% year over year. Natural gas so cheap you have to wonder if there's a slowdown in manufacturing and not just a surfeit of the stuff. By the way, they're giving that stuff up, too. They just give it away or they burn it. Car loads per train are down. Linerboard, that is the kind of thing that you get an Amazon package in. Chemicals, they're falling. Freight costs are going down big. There isn't a commodity I follow that's going up in price unless you count gold. Some of that's because the auto market's in rough shape and lots of the stuff goes into cars. So maybe we can keep chugging along here, aided by low long-term interest rates, courtesy of the weakness in the EU. Maybe our economy will be just fine, but maybe it won't. And if you're the Federal Reserve, do you really want to take that chance? One reason we're in this position is that the Fed tightened too aggressively late last year. A really stupid move. Given all the pessimism and fear that the president and tweets instill, it makes a ton of sense for Jay Powell to give the economy some leeway here. Because otherwise, here I am, and this is what I'm going to be saying.
They know nothing. They know nothing.
I will bring that back.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.